morning, good afternoon, and good evening to everyone from wherever you're listening to this podcast around the world. And a warm welcome to this third edition in our podcast series called the Gspröch. My name is Stuart Peterson, and I am the resident host of the Gspröch. In the last podcast, we listened to Jan-Michael Steiner, Capco's principal consultant, giving us his deep insights into the inner workings of the new MiCA regulation, which comes into force in the EU zone on the 30th of December of this year. We want to ensure that the Gspröch always delivers diverse, highly engaging and relevant topics and speakers. So the focus of this edition is the subject of asset tokenization. Now, asset tokenization has been a slow-burning topic in the digital asset sector for several years now. It's seen some outstanding successes in a few niche areas such as stablecoins. However, in other areas such as tokenized money market funds or assets like real estate, it's taken a little bit longer to yield any tangible results and clearly defined business models that can bring sustainable growth revenues for market participants. The last year or so seems to have marked a bit of a turning point, though, as we have seen a more coordinated efforts from central banks and institutions, perhaps most notably in the form of Project Guardian, which is an asset tokenization project spearheaded by the MAS, which is the Monetary Authority of Singapore and the regulator there, and which includes participation from 17 financial institutions such as JP Morgan, BNY Mellon, and Franklin Templeton, to name just a few. Now, many banks in Europe have also started exploring the potential of asset tokenization or have come out and stated active interest in testing out these new use cases. So I therefore have the pleasure to welcome today's guest, Nils von Schoenaich, who is the Chief Revenue Officer at Tradias. Now, Tradias is the digital asset trading arm of Bankhaus Scheich in Germany. Tradias offers an end-to-end tokenization service covering consulting, infrastructure, and secondary market trading requirements. And Nils has played a key role in building out this critical offering, as well as supporting Tradias' clients in getting their tokenization efforts off the ground. So, Nils, I'd really appreciate if we can commence today's session by you giving an introduction to yourself, as well as the stellar work you and the team at Tradias do for your clients.
Yeah, thank you very much, Stu. It's a pleasure to be here. Thank you for the invite. My name is Nils von Schoenaich-Carolath. I'm Chief Revenue Officer at Tradias. I started my career at PwC in the area of banking supervision. Afterwards, I went on the private investor side. I was very much focused on structuring real estate financing deals. And there I had my first touch point with blockchain and tokenization in my work environment, I would say. So we were the first ones worldwide, the first listed company in the world who tokenized a digital twin of its share on the blockchain. And I was leading that project. Afterwards, I became self-employed, and one of my biggest clients were Bankhaus Scheich. So I helped them to build up the whole tokenization sector. And the moment Bankhaus Scheich decided to go all in on that topic and to found Tradias, they asked me to be part of it. And I decided to help them to build a bank. And this is what we're actually doing. So Tradias is a trading house. Like Bankhaus Scheich is also a trading house for over 40 years now in the traditional world. And we do the same with Tradias now in the crypto world. So we offer OTC trading and market making for crypto spot. And in our second division, we are also very active in the area of tokenization and digital assets, as you said that.
Thank you very much, Nelson. That's a great introduction. So I'd like to kick off by maybe going back a few years and plotting the journey forward for Tradias. Now we know that MiCA is bringing digital asset regulation into the EU this year, but Bankhaus Scheich has already expanded into digital assets with Tradias from 2020. Can you give us some of your perspectives in terms of what has happened over the last 4 years in terms of institutional adoption of digital assets?
Yeah, sure. So the German market was very retail driven in the beginning, and a lot of neo broker were the first ones who moved in the market. and setups were very much focused on operational capabilities, exclusive setups with market maker guarantees on prices, etc. And in the last, I would say, 12 months to 18 months, this really changed. So more and more traditional institutional players are seriously looking into the topic, and I would say we see projects that are not proof of concepts anymore. They will definitely go live within this years, and we talk about really large banks, traditional banks. And what does it mean? The market becomes more serious. This drives competition for sure, especially with OMS systems like yours, right? And spreads are becoming definitely more competitive.
Yeah, thanks for that. So, I mean, if we sort of distill it down to one single main factor, what would you say was the main rationale behind Bankhaus Scheich actually, creating Tradias and actually giving it a separate name to Bankhaus Scheich?
It makes sense to split traditional and crypto business, right? So due to our first mover advantage as a regulated player, it was good that we started under the regulatory umbrella of Scheich for sure, but now the opportunities are way bigger, building something on a greater scale here. And so I would say, it's the next logical step to separate businesses and really have a full focus on digital assets as a standalone regulated crypto bank with its own identity, with its own corporate culture, right? And for sure, also the topic of investors is a relevant point, because for investors it's easier to invest like in one product in the crypto world if they are interested in that, and not like in a mixed up product, right?
Absolutely. So, I mean, I think that from what we're seeing in the marketplace, we could potentially say that Tradias was a pioneer in terms of its sole and core focus on institutions. As you said just now, the main focus was around retail and neo brokers. So, what was it like developing this new business in line with both digital assets and crypto, and overcoming some of the hurdles and objections that you might get from institutions?
It was definitely a lot of education at that time. It was all about education, to be honest. So it was like, on the one hand, transferring the knowledge from the TradFi world into the world of digital assets, right? So we wanted to ensure that the regulator is on board with every step that we made. So it was a lot of education with BaFin at that time, and same with the potential clients, especially in the early stages. So this is one of the, I would say, key reasons why we built a setup that is very close to the traditional finance trading setup, making it easier for clients and the regulator to like draw comparisons, understanding everything. So for sure, it means that we did a lot of gold plating, so putting risk measures into place that were not required at that time. But I think it was very important that all stakeholders feel comfortable in a world that they already know for years and decades, right? So that was our approach.
That's a great approach. But I mean, one thing I wanted to sort of cover as well is I'm sure that from sort of 2020, people were sort of dipping their toes in the water, so to speak, in terms of getting exposure to crypto. And, you were providing an institutional grade service around that. But how do you then transition or mature, build your offerings, but mature the understanding from the institutional market into expanding into these new use cases, such as, for example, tokenization?
So as stated earlier, the first movers in Germany were really the retail-facing platforms, and we saw some smaller fund managers, family offices that were seeking exposure earlier on, but the adoption rate for the larger fund managers is still lagging as of today in Germany, a bit due to the operational complexity for sure to gain direct crypto exposure. With some of those potential clients, we therefore see that's a good example. For some of them, we really see the tokenization, the tokenized asset sector as a potential entry door that might enable direct crypto investments then in the future.
Do you see that there's a trend from either larger, more established, mature brand institutions versus smaller, more recent entrants and players in terms of their entry into digital assets? For example, would a big tier one bank more focus on asset tokenization because of some of the potential alignment in the market and maybe potential negative sentiment to crypto? Or does it not really sort of matter, that it's just dependent on the actual bank itself?
No, you're absolutely right. So for sure, crypto and crypto spot out of our bubble still has or looks a little bit shady for a lot of people, right? So the tokenizing or building digital twins of their traditional projects, bring it on the blockchain, open it for new markets, lower costs. They understand it, it makes sense for them, and it's easier to implement it or to get an approval to do it, because there we really have like a regulatory framework that you can rely on. For example, the EWPG in Germany, right? So the big players, the traditional players who are more risk averse, really start in the tokenization area because it's easier for them, because it's even more, or it's even closer to their products that they have right now.
That's excellent. So what I would maybe like to ask you is, based upon some of your key learnings from, the clients and how you've grown them over and their understanding of crypto and adoption of digital assets over the last 4 years, what would you say were maybe the top 1 or 2 key challenges, and therefore the learnings that you're taking into your next iteration and product evolution?
That's a very good question. So key challenges, biggest learnings. So I would start with the challenges. The challenges were definitely project planning. Underestimating sales cycles is a big topic. When you think you can make it like within 6 or 9 months, a project, especially with traditional players, can take up to 2 or 3 years, right? There's a huge difference between traditional players and brokers that were already focused on crypto. There you can start a project within like 3 to 6 months. So it was definitely underestimating sales cycles. And the learning was to not only focus on the traditional players, but also looking at the crypto exchanges or crypto brokers that already are in the market within Europe, right? And tackle them as well, because otherwise you don't have a business model that you can survive, because you need to earn money today, right? And not in 3 years. Then it was definitely the aggregated projection of anticipated volumes. So a lot of potential clients overestimated their volumes and like took the volumes from crypto summer and they woke up in crypto winter. So this was definitely something that we also underestimated. And in general, finding suitable partners that meet both operational and regulatory standards, I would say.
Yeah, I completely understand, from our perspective, and who the client segments and clientele that we serve. I completely agree with you in terms of sales cycles and understanding, and also understanding how banks and financial regulated institutions can actually gain budget and approval to move into the space. What is the actual entry points? But in terms of some key milestones in terms of your business growth and some successes at Tradias. Could you name some of those key milestones you think that would be relevant to the listeners today?
One milestone is definitely like our partnership that's public with Trade Republic as the large first mover in the market in Germany. That really validated our business model. And then I would say for sure also the Land Hessen. So that's an ultimate stamp of approval of what we are doing in a regulated way, because we are working together with the German state. So it's an honor to work with the German government. And this also opened a lot of doors for us with larger institutional players. For example, that's maybe then the third milestone with Allianz Global Investors. So we are collaborating with them as they are an esteemed asset manager, and we are doing like the tokenized money market fund together with them. And this is also a validation and a tokenized asset that shows that we are more than just a crypto trading house. So I would say these are could be the 3 main milestones I'm chief revenue officer, so I always look from the customer perspective, right? So I think these are the 3 most important milestones for us that opened a lot of doors.
Thank you for giving those insights, and I think it's very, very important that institutions that we show that when we serve the regulated financial services industry, that it's not just about, as you said, driving revenues from volume, but actually showing innovation and how you can bring new products and services to market, and how you can help institutions along that journey. Because we find that a lot of institutions are still trying to educate themselves whilst bringing different business models to market, and what they see would be, a good brand for them as part of their brand recognition, but also where are the revenues, not just today, but building for the future as well. Yeah, so if we then sort of turn to today and maybe looking forward into the future, maybe you could comment on what you would see some of the opportunities ahead for us in the digital asset industry. Generally speaking, we've got the broad impact of MiCA coming into the EU zones. That's directly going to affect your core, clientele and client base. Maybe you could provide some comments on where you see the market opportunities growing from.
Yeah, I would say for a lot of jurisdiction, the requirements will become way tougher than today, right? There must be a reason why people get a license somewhere else than in Germany. So this could lead to problems for some of the smaller players in the market, as costs are rising due to regulatory burdens. In our opinion, this could lead to further consolidation in the market, and at the same time, of course, MiCA offers a great opportunity to target a unified European market with a proven setup, which is great for us for sure, with a strong hub in Germany. So I would say this is the impact within Europe, but in my opinion, there's also an impact beyond the EU. So for many people outside of the EU will be a more attractive market, because now you can enter the market with one license. So you are an addressable target market. So the addressable target market will be way larger with less effort, right? And on the regulatory side, I would say the SEC or Asian regulators will definitely have an eye on that. And when MiCA will be a success, they will try to adopt similar rules as well. And so MiCA could accelerate the regulatory process towards regulatory clarity around the world.
Yeah, absolutely. We had a similar comment from Jan Miko Steiner in the previous podcast around that I think a lot of institutions outside of the EU zone and a lot of regulators are closely looking at MiCA as the benchmark regulation. Clearly, we're going to come to elections in the US, and then hopefully next year we'll find some clarity on regulation. So that traditional largest market will be opened up once regulation comes in, and I'm sure the US regulators are looking at MiCA very, very closely. So now maybe we could turn that focus on to actually the core part of today's podcast, which is around asset tokenization. So, besides sort of trading or market making, tokenization really is a pillar of tradias' offerings. Even though we know that tokenization has had a lot of, it's been a hot topic for a few years now. When do you actually see the real world use cases for tokenization?
Yeah, as you stated, there are a lot of great studies that talk about the enormous market potential. I would say everybody is waiting for the big trigger, right? And for example, yesterday, Matthew McDermott from Goldman announced to start 3 serious token projects until end of year. So I would say now it's not anymore only about like the curiosity about tokenization and blockchain. We really talk about economical feasible business cases, right? And that's what it's all about. If you can't make money with it, or if you can't save money with it, no one will adopt it. And I think a money market fund is a good example. So you get interest on your cash, you hold it on the blockchain, you can use it as a collateral when you are trading, or like for any other reason, for any other collateral reason. For sure, a Euro stablecoin would be like the ultimative goal for liquidity management and for transfer of funds. On the long run, we see a broad range of like financial and real assets. I would say real estate assets, because for this, it's a very intransparent branch. So there it makes total sense to use that technology. And this will allow investors to do a normal and complete portfolio allocation within a wallet infrastructure, completely leaving the traditional banking system. So I really see it, to put it in a nutshell, I really see it like for the financial product or products from the financial sector, and for real estate. So like watches are nice, paintings are nice, that's cool, but you need like a bigger size to really have a scalable and profitable business that makes sense for everyone. So I think it will really be real estate in the next years and the financial service products.
Yeah, I completely agree. I mean, we've seen for a few years now, there's been this, probably even since sort of 2016, 2017, when we looked at the original distributed ledger technology and blockchain, which everybody thought was crypto and it's not. There was always talk about, tokenization of real world assets, and actually the core business case was clearly around increasing the ability of liquidity in traditional liquid assets. Real estate funds is a classic example because it allows the ability to actually produce more liquidity, which allows more freedom of movement of assets, and therefore allows more trading opportunities as well. From our understanding of the market, that's what I think are some of the core use cases. And so, do you think that there is that demand there today? There are participants in addition to tradias like STX or Stuttgart, to actually, in terms of moving the actual market forward, in terms of providing platforms and innovation to actually allow institutions to actually realize their aspirations in digital assets.
So of course we try to push the topic of tokenization as these players, but in the end, and we have to be honest to ourselves, it's all about demand for any product, and tokenization is no exception here. And the question is, how do you create the demand? And you just said platforms. So a lot of companies try to do it like with closed platforms, and I don't believe that we will see the real demand and getting over this critical mass with these closed platforms. So I think we need an approach with an open system. Yeah, for example, when we tokenize something, we have a multi-asset capable trading system. So when you get like Bitcoin liquidity from us, you can get via the same stream the prices for the tokenized assets. So it's important that, I think, in my opinion, it's important that these products are not, you cannot buy them like on one closed platform. You have to buy, you need to buy them everywhere. Like everyone who gets like Bitcoin liquidity from us can then list these products, and you can buy these products everywhere. And this is the key for mass adoption, in my opinion, because then you get the real liquidity. If you are just focused on one platform, I understand why they are doing it, because the community and the platform is their USPs, but I don't think that this will be a driver to really enhance tokenization and really create the demand. I think the products need to be available everywhere, like where that you can buy Bitcoin everywhere.
So, in that respect, using the term platforms, you think the platforms need to be interoperable so you can move assets and liquidity, and buy and sell and move them, not just across like custody wallets, which we see today, but also in terms of platforms where they can actually be exchanged for immutable value transfer.
Absolutely.
Okay, no, that's very interesting. So look, we touched on a couple of areas of MiCA. For us at Wyden, we're really focused on trading and trading life cycle. Our of MiCA around best execution and areas like that. You guys may have a different view and a different perspective on how you're looking at MiCA, particularly around the offerings that you provide. And this podcast today is around asset tokenization. So how does MiCA and how do you view MiCA in terms of increasing adoption of assets and asset tokenization?
So I would not only focus on MiCA. I would put it like in the whole regulation and regulation, or I would frame it for the whole regulation if it's okay for you. Yeah. So right now, for example, we cannot put tokenized assets on exchanges or on DeFi platforms due to its status as a MiFID product, right? So regulation still needs to evolve to make it scalable. But for example, with the EWPG or with the Crypto Securities Register, we are definitely on the right way, right? So we are far beyond other countries, right? So in my opinion, regulation is right now not the main bottleneck in this topic. It's really like demand and how you create the markets. We need a more coordinated and collaborative adoption of the underlying technology to really like enable the full potential. But it would be definitely helpful if you could like trade these assets as well on exchanges. So with the pilot regime, they are working on that right now. But there are also hurdles. So, for example, we are not part of the pilot regime because for a company of our size, it's just like too expensive, IT capacities, HR resources, etc. So only the bigger companies can like afford it. So yeah, let's see how this will work. As I said, there are hurdles, but I think the regulation is not the main bottleneck, and in a lot of areas they really did a good job.
So would you, for example, see that, whereas we have this, looking at institutional adoption of asset tokenization and real estate, could you see a time where you have this change from digital assets, traditional assets, and really that's with ETFs, right? And maybe would we see a day where an asset manager would release a digital real estate ETF, right? So actually really, really truly increase liquidity in that market. So not just be to preserve institutions, but also to bring it to the retail market, for example.
Yeah, that's definitely possible. So if you refer to the real estate market again, I think I don't know if the fund example is the best example for real estate, because you already have like these funds where you invest like in a couple of different real estate assets. The idea is that you can really select one piece of real estate, right, and invest in equity or also invest in debt. And this is like we are only looking through the eyes of a retailer. There are also huge institutional potential. For example, when banks are like tokenizing their debt, their mezzanine debt tranches, and they can trade it within with other banks, right, and really like adjust their risk day to day. Normally, when they do such a deal, they have like the position for 3 years in their books, right, and through tokenization and through a market where the banks can interact with each others, they can say like, okay, my risk appetite is lower now, so I'm trying to sell like 4% of that, or I don't believe in Berlin anymore, or I want to shift my money from East Frankfurt to West Frankfurt. So there are a lot of opportunities, not only for retailers, but also for the institutions, especially for the banking sector.
Maybe we can move, I think, probably towards the last topic, and I think it's been well reported that there are very, very diverse sets of views and almost polar opposite views in terms of where people think about the ability of what public blockchains will play in the market for tokenization infrastructure versus what we call private or permission blockchains, such as, for example, JP Morgan's Onyx. How do you and how does Tradias see the evolution here?
Yeah, that's a good question, and I don't know if I want to answer that question for Tradias or as an individual. So I give you my individual opinion in that case. So I'm a real friend of public blockchain. So I see like issues with private blockchains, like interoperability is limited. A broader adoption of private blockchains is extremely difficult. So, however, I understand the need for some of the heavily regulated financial institutions to have a certain amount of control of the protocols and change. So, therefore, I believe that for the foreseeable future, we see a lot of applications on public permission networks, so which could be a good mix for both worlds, right?
Yeah, and where would you say, just finally on that point, what would you say would be the sort of one or two main driving factors that would, push regulated institutions to actually adopt public blockchains potentially versus, private permission blockchains? There's a big growth initiative now around, for example, the Canton network, which a number of the banks are involved with. Maybe you could provide a single comment from your own perspective on that.
I really don't know if I'm the right person to answer that. So because we really have to ask them who are using like the private blockchains, why they do it. I don't know if it's like respect for the new technology or fear, or it's also, as I said, it's regulatory standards. It will be like company standards that I think that they might have another view on that in a couple of years when the technology and everything is more involved and it's like common in all companies that they use the technology. Then they might be able to leverage the advantages of a public blockchain as well, right? So I don't have a real answer on that question, to be honest. I can only speculate. Maybe you can invite the guys from JP Morgan, Onyx, or Matthew McDermott from Goldman Sachs. So if these two guys would have a discussion, that would be really interesting to listen to the arguments from both sides.
Maybe that's a great great idea for a future podcast. And of course, we have no crystal ball here as well. But if we sort of look back, and some of us who are old enough to have been worked in the market sort of over the last 35 years, you can see some definite adoption of protocols across the market that's provided a lot of standardization, and standardization allowed communication, allowed interoperability, and for markets to flow freely there. I do believe that's where we are going with blockchain, but whether that's on public or private or semi-private permissioned, I think that's to be sort of fleshed out over the next 5 years in my own perspective. But thank you very much, Nils. I really appreciate the comments and the perspective there. Well, listeners, unfortunately, we are at the end of today's really insightful session on asset tokenization from the perspective of our guest, Nils von Schoenaich at Tradias. And I'm sure that everyone shares your passion and enthusiasm for the great opportunities in front of us, and probably many of these opportunities will be conceived. So, Nils, I'd like to extend a warm thank you for taking the time out of your busy working week to join me on this edition of the and to all of our listeners for listening in once again. As ever, please spread the word. It's the go-to podcast for cutting-edge information and insights into the world of digital assets. And with that, see you all next time.
Thank you very much for the invite.
Thank you very much for joining today, Nils.